Hello students. In this video I'm going to talk briefly about differences between the perpetual and periodic inventory systems and journal entries. There is a very good summary in the textbook, a comparison between the periodic and the perpetual system. You should go to your textbook and study that summary so that you'll be more familiar with the actual journal entries, but I will go over a few of the differences here. Also, I know that you have just finished the chapter on special journals. I just want to point out that that is the only chapter that we will be using special journals. We will be going back to the general journal in this chapter and all chapters that follow, and we will be using the general journal format, so keep that in mind. Okay, looking at purchases, under the perpetual inventory system, we're going to be debiting the merchandise inventory account for purchases and crediting accounts payable. That is, of course, unless we pay cash for the inventory, which we don't normally do. We normally credit accounts payable. It will go directly into the merchandise inventory account because we are using the perpetual inventory system, and as we talked in a previous video, we know that any transactions that affect inventory will go to the inventory account. Under the periodic system, we're going to actually debit purchases. When we have a purchase, we again will credit accounts payable. So the only difference here between the two systems is the debit. Here we will be debiting merchandise inventory. Here we will be debiting purchases, and the reason that we don't debit inventory in the periodic system is because we're not keeping up with the inventory as it is purchased and sold. So we'll go into the purchases account. Okay, when we go over to the sales side, under the perpetual system, anytime you make a sale, you're going to have two entries, not just one. You will have the first entry to record the sale. That's going to be a debit to accounts receivable, a credit to sales. The second entry is going to record the cost of the sales and reduce the inventory. So you're going to debit cost of merchandise sold and credit merchandise inventory. That's under a perpetual system where we are keeping up with the changes in inventory and we're keeping up with the cost of merchandise sold. Now, under the periodic system, we're not going to be keeping up with inventory. We will not have the cost of merchandise sold account. So under the periodic system, you will simply have a debit to accounts receivable and a credit to sales. That's all you will have there. So this is just an example of some of the journal entries that we will have in this chapter. And if you do have any questions, please let me know. Thank you.